This is Justin Pulitzer. This is my weekend video for the week ending November 23rd, 2014. I have a lot of symbols to try to cram in. This might be the most I've ever tried to do into one video, so let's see if we can get this clown car going. So as you can see, the S&Ps had broken out to a new high and then have just been kind of in grind melt-up mode the last week or so. And then on Thursday we had a gap down, and it was met with buying all day. It was a bit of a trend day higher, and we after that the bulls saw that the market there was buying and that we couldn't go down on that, and then wham, we had this big gap up on Friday, and then that did the exact opposite, and it wound up selling off pretty much all day. What was unique with that was we got to one of my short-term targets, which was the 1.272 Fibonacci extension, which was in 207s that I had been discussing, with the full 1618 being up at 214s. But let's not get ahead of ourselves discussing that yet. What was a little concerning to me with how we got here is that the market broke this low, and we had this kind of flush washout and this like huge rally back up. And we've been making a pattern here of lower lows and then higher highs, which is the quote-unquote megaphone pattern. I don't really get too into that. I'll show you guys what it looks like on the chart. I don't really make too much of this pattern other than it is considered bearish. You can see it goes this way, and then it goes this way, which kind of is like that megaphone look. So what I'm thinking here is, and what I think most chart watchers are probably wondering, was this an exhaustion gap that put in excess into the market, meaning the kind of the last gasp of buyers, and then we go straight down from there. You can see here we did have a little bit of an uptick in volume, but it wasn't like some kind of blow-off excess top capitulation like you can see down here at the lows. We had this huge spike relatively in volume, and you can see this is kind of like a little bit of a baby. It's just a little bit above what's been going on, but I mean, I think that would be expected on a day with such huge move in price. So for the bulls, what the bullish case here is that value did kind of migrate higher here on this day because price and volume was up above here, but I think the onus now is sort of on the bulls to continue with price up, because we have kind of gotten really steep, and I guess this is kind of, I wouldn't say that this was any really correction. It was sort of just biding time and kind of just melting higher. So what I would think, if we do get a bit of a pullback next week, is that we can get back to the 20 MA. We're about anything that's about $5 or $6 extended from there is quite a bit. We're not as extended as we had been. I had been discussing that we were like $8 away a couple of, I think it was like, not this past weekend video, but the weekend before that. So now we're about $4 away, which is, not as crazy, not as cray-cray, but it's still a pretty decent amount. I could easily see the market wanting to pull back and test that 20 at some point, maybe retest the breakout at these old highs. You can see we kind of came up with this Japanese QE and then had some Chinese QE. So it's been a lot of central bank fueled, sort of the drug fueled rally into this into the last couple of weeks. So it wouldn't shock me to see some of that kind of euphoric. I really don't want to say euphoria, because this isn't leaps and bounds up here, but some of that excitement maybe come off a little bit, and maybe we do drift back to retest that old high. I would think the market is healthy, quote unquote, if we can kind of stay in the upper distribution of this range. So that would be 199.06, which I had discussed possibly being the left shoulder, and then somewhere between there and 201.90, which was the old high here. That's a pretty decent correction if we do get that. I mean, that's a pretty big one. But I mean, look what we've done. I mean, we've come up pretty strongly. It wouldn't shock me to peel back a little bit and consolidate some of those gains. Keep in mind, this is a seasonally bullish time of year, so the pullbacks might be met with buyers a little bit quicker than usual, just because you have the Santa rally or what have you. But if we do take out this low, and if it's on some type of a gap, you're going to hear a lot of talk that the top is in. I'm not necessarily convinced of that. But I would say that the bears that initiated shorts on this day have great trade location, and they kind of, everyone wants to be the genius that picked the top, and no one wants to be the sucker that bought it, so to speak. So like I said, these guys might be a little bit stubborn if we do have some price action that's lower. If it's just sort of like a grind chop and we can kind of maintain value over this consolidation here, I think then the bulls might be able to re-energize and get the move up to that full 618 extension. But I'm kind of in a wait and see mode a little bit here. I really want to see the high and low of this day here is really, really important. And if you take a look intraday, let's see, 1 day, 5 minute, you can see we did wind up selling off, and then we rallied back a little bit at the end, but it was really even just shy of about 50% of the move. It was sort of, we closed in the lower half of the distribution to me, which was a little, I wouldn't say bearish, but it wasn't as bullish as you might think of a day like that would be. You can see we didn't even come back up and close at half back, and this was really where the real breakdown toward the end of or the middle of the session began. So I'm not thinking that that intraday action on Friday was anything really super-duper impressive. I would be a little bit cautious if we lose the lows of that day and see where we pull back to the reference levels. If you take a look at Qs, let me get back to the daily. Let's go 9-month daily. That seems to have been working well for us. You can see it's kind of a similar chart, although this one we did wind up closing the gap fully on the Qs. We did come back into that range, although we did wind up closing at an all-time closing high. You can see this bar here was 103.68, and here we closed at 103.86. What was the high of this day? 103.82. So we even closed above the intraday high of this bar, which is still, again, kind of a feather in the cap for the bulls, so to speak. Again, this chart looks the same to me as SPY, though, so pretty much the same analysis. And you could see, I would think that if there is some type of a pullback, maybe it's to this consolidation area of the old highs. Take a look at the semiconductors. This was something I had made a big brouhaha about a couple of weeks ago, and it really wound up being nothing, which really is shocking to me. You could see we were in this really defined uptrend here for quite some time, for a few years. Was this time on 2 years? Let me see if we can go to 3 years. Yeah, you can see we're in this really, really defined channel, uptrend, and then we lost it on this big gap. And I had discussed this being really a bit of a game changer for me and super bearish if we stay below there. And this really rallied up. I mean, we spent a couple of days down here, but we made new lows, and then I had discussed that this high and low of this day was really important. And you could see here we came up, we kind of tested into it, and then here closed above it, and then it was off to the races. We had this gap and go here. This is very impressive price action, and we got back and closed up over the trend line, and here we retested it and then just continued on, and now we've even made a new high. My one thing that does have me a little bit cautious is a doji at the top of the range. You can see that has not been very good for this in the past. It has been met with corrections, although you could see here there was a bit of a choppy sideways range, which wouldn't surprise me again, considering we are now at a new high. So my thinking with SOX is that this is putting in maybe a little bit of a caution tail, although we did break. This was another breakout of range, and it is a new all-time high. So it is bullish, but again, just a little bit cautious mode because of these kind of past precedents. Let's take a look. IWM. I've been discussing this one at infinitum. Sorry, this is a really choppy chart with a ton of levels. But the one that's really important to me, which is the one I always talk about, is this caution zone of 117.37, and that any price action above there is usually not sustainable very long. It can do it for a couple of sessions, and then it pulls back. And you can see the high here to the tick here was that 117.37. We pulled back. We've been kind of like floundering, try to get through it again. Pulled back. Now we're failing again. So my thinking there is that we're still sort of in a range until we're not. I would think that IWM has definitely healed a lot of the damage because we broke the downtrend and it sort of kind of held here. Any move over this high of day I think is pretty bullish and will put the close to 121 into play. Any loss of this, and I think we're just kind of in range back maybe to retest the uptrend line. Let's take a look at some of the Momo. We're already a little further in time-wise than I would have liked, but take a look at Apple. This has been pretty bullish chart. I had discussed this getting up to 109s a while back, and I had said to take profits, and then I had said to that we had this bit of a consolidation. The back off wasn't as much as I had thought it would be, and any move over that high, that 110.30 was a buy, and we've been trading that. And I kind of got out a little bit too soon. Right, kind of up here, I sort of drew this channel, and it sort of artificially stopped me out. There wasn't. I had discussed that I sort of was drawing this artificial channel that I had lows to connect, but I didn't have highs. And this to me was just to get up here was just prudence to take a little bit of profits off. And Apple has just ground, and I had discussed this as being a possibility and a very likely one that we would ride this upper channel, and that's exactly what we've done. Unfortunately, it's done it for a few points without me. 117, I don't for some reason have it on this chart, but that was is another fib extension, and one that I would be a little bit mindful of. Apple, it would not shock me if the market pulled back, as if we did come back and retest some point in this steep channel, and if that breaks, maybe we do see a retest of like that 110 or somewhere in that area. This stock is obviously working, and I think it's going to work because it's working. So I would say pullbacks here are buyable. It's really hard to chase here. I don't like to chase, particularly with stocks like this. I did discuss chasing here once we broke out the 103.74 because that was range extension, and I said we'd get to the 109s, which we did with flying colors. We kind of were out of the trade here for a little, got back in, and now we're out. At least I'm out again for the most part, and we're just kind of riding this channel. So that's what to keep. That's what's to watch. Let's get into some more of the Momo. Amazon is kind of coming into some resistance. I had discussed that we would probably get back to the backside of this previous uptrend or somewhere into this area, and that's exactly where we got. So now that we're there, the big question is will Amazon break out? My thinking is it's it's moved a lot here. I do like it as long as we can maintain price over this 332.88. We kind of closed below there, so we're a little bit below there now, so I would say that it's sort of a wait and see, and to see if this high a day can be taken. If we can, then we have, you can see these, this chart doesn't do, just take my word for it. This is the primary downtrend, and then this is sort of like a less steep secondary. So if we can get above this high here, I think we will come into this area, into this this 346s, 347s, and then if we can get above there, then I think we can probably see the full gap fill here. I would be a little bit more of a buy the dip person rather than chasing here in Amazon, although as long as it is still under trend, it's technically you can't really buy it, but it's a fourth quarter play, and I think that this stock may be buyable on pullbacks at defined levels like the 50 MA. So let's see what happens with that. Again, it would be a long over here for a move up to this area, and if we're below here, you could always play it short back down to the 100 or maybe even the 50. But that's how I'm seeing Amazon. Baba did something, was a naughty little Baba. Wow, let's see. There we go. This stock did exactly what it was supposed to do for us. I had discussed it being a breakout here and that we would get to this 1.618 fib at the 110.14. It did it to the tick, and then it turned out to be really rank conservatism on my part because we did get fully up to the 120s. And then we've since pulled back, and we've done something that it shouldn't be doing if it's going to be healthy, although this trend is really, really steep, and I'm not making as much of this as a lot of people on the stream might be. We did break trend, though. I had discussed it being a buy off the 20 MA, and it was. This was this day. We even retested it here this day twice, and we rallied, and we failed, and it's kind of come back down below this area. My thinking is for Baba, the trade for me is kind of the long side here has kind of been over for a little bit. I would get at least for swings, for day trades, it's absolutely fine. This is a beautiful piece of machinery for day traders. I would be interested in really for a swing somewhere around this area, somewhere between this 101.41 and the 61.8 fib, which was 97.02. The IPO day, the launch was 92.70. I don't know if we're going to get back down to there, but I do think it's possible we get down to the IPO day high. I think that a lot of big gun money owns this, and they're looking to build positions in this stock. So I do think it's a buy the dip stock, but I really would feel more comfortable with retesting the breakout. That somewhere between that, like I said, that 101.41 and the 97s, that somewhere in this range to me would get interesting. Particularly if this 99.70 holds, meaning we reject price, like we come down here and then bounce pretty hard, we would reject over the IPO day high. That would show me really something special with the buyers. When we talk BABA, we got to talk YHOO. Somebody still owes me a drink. I got to go back through my stream and see who this was. I had discussed on this day, actually. They were in some short calls. They had some money on the position. I told them to get out, and man, did that save you one hell of a you-know-what kicking. We're a family show here, right? Let's keep it clean. So we are back up to this high of this channel that I had drawn in. Let me see, was that an artificial one or a real one? Nope, a little bit of an artificial one. I had drawn this, connected these lows and then extended. I redrew as a channel and I used this high, so it's a little bit artificial, but I do think it's just as valid. I'd be a little bit cautious with YHOO. I do think you could buy it on dips. There'd be some interest into it. I'd be interested a little bit more into the mid 40s though, sort of where this like insanity began. I think that this is obviously a lot of people are a sleeper play on BABA, and a bet that YHOO is kind of cheap. It's not really being valued for it is a company. I think that the game is kind of over, and Google won a long time ago, and I would. I'm not such a big YHOO fan, although I do think it's probably getting more of a fair valuation now. I do think since you made a new high here that any pullback is probably buyable. Any Momo stocks that hold the 20 MA, in my opinion, are bullish. So that's my thoughts on YHOO. Facebook, not so bullish. I had discussed this one being actually a short in after hours. On this day, I was saying at 80, once a momentum stock can no longer go higher, and their numbers were good. I know a lot of people were worried about the spending or whatever. That's always the why. We worry about the what, which is price. And when it can't go higher, it's got to go lower, and it's been in this bit of a bear flag pattern, and it's kind of breaking down. This is, you can see here, this 100 MA. I'm sorry, this chart has a lot of lines on it. This is my real chart that I use, so it's a little bit it's got a lot of levels on it. But you can see here, this is the 100 MA, this yellow line, and for the first time you can see we were holding it. Here we closed below it, came down here, rejected price, came back up, tested a little bit above it, but we are now closing below the 100 MA. My thoughts are that that's not so bullish. You can see we're kind of coming to the most dangerous part in the stochastics, which are the move below, although I don't think that this is going to be super-duper dangerous. There's been some overhang with the WhatsApp lockup. I would think that this area here may be a double bottom retest as a buy, and I think that the 200 MA will hold, and that has been creeping up with this kind of sideways price action. So my thinking with this is you can probably sell the 67.5 strikes or the 65 strike puts on any move down low, and those probably be quote-unquote safe. I do think that it's possible that those get, you're under pressure a little bit with them, but I think in the end that those would probably wind up being winners. Let's not do that one yet. Let's do Twitter since we're still talking Momo. I've been saying Twitter is a bit of just a sideways grind, with the risk range being somewhere in the 42s and the 35s, and we kind of just pinned 40. Did we pin it to the tick? Close 40.03. So pretty close enough for government work, as they say. So I think that this is in danger also of a little bit of a test lower, but I'm hard-pressed to think that this really retests the 29s again. It is possible. Technically, this snap here would be a fill-up of the triangle down to those old lows. I think that would be a good spot for for put sales. I'm not as bullish on Twitter as I am on Facebook and BABA, though, because Twitter is a momentum stock with a high multiple and has no growth. So I think that the street really is going to want to see 2 good quarters out of these guys, proving that, and stop with the musical chairs with their management before that this stock could really get any real super duper headway. That said, I do think somewhere in this 35 area will hold. Excuse me. I think you could probably play it short on the break of this 38.81 because that would be some range extension lower, although I do think that this is going to be a bit of a harder trade to push lower. I could be wrong. Maybe it will cascade lower down to those 29s, but I do think that this is kind of going to be a bit of a grind if the market holds up. If the market doesn't hold up, you'll probably get that range extension a little bit lower. KMI is one I've been discussing with this inverse head and shoulders pattern. Anything over this 39.26 I thought was bullish. We came back up here. We had a little bit of a sell the news on the event. With some decent amount of volumes. This is a bit of an arbitrage play now with KMP and a couple of these other stocks that they're rolling up into KMI, and I think it's just been under a little bit of a sell the news pressure. I do think it's going to come back. It could come back here. Maybe it already did what it needed to do, but as long as we hold trend and as long as we hold over this 39.26, I do think that this area will set up to be a buy the dip for a right or right out trade. If we lose it, let's not overstay our welcome too long. If we do get a bounce there, I do think we can get a move back up to retest some of these highs. So that's what I'm thinking with KMI, a right or right out entry over here. Let's see. LULU is another one I've been kind of on the stream discussing that I think that there's something going on in here bullish. We did take out this old reference high. We took out this breakout flag high. The pullbacks have held where they needed to hold. I said this 45.95, and we got to 45.94. We did get one tick below it, but it's this closed strong as the market was selling off. We did rally decently, so I think LULU is probably okay as long as it holds this trend on any pullbacks. There may be some market weakness, but this stock is showing some nice relative strength. You can see the 100 MA, the 50 MA, and now the 200 MA are flat. The 200 is flattening. These have bent back up. If you could get the 200 to kind of bend back up, I think that would be very constructive for the stock. And as long as we're over this 45.5, I am bullish on the stock. Anywhere below there, I'm a little bit more in caution mode. I have really good trade location with the breakout over the 42s, so I'm trying to hold it. But let's not overstay our welcome there. You could see on Friday there were some reversals in Foot Locker and in some of the other quote unquote athletic stocks. So let's just be mindful of that. Netflix fell apart. I had discussed that this was along as long as it was over the 366.17. We broke that and came back down here. I had said that this was kind of going to be a go with on a break of the range here or a breakout. It wound up being a breakdown. I'm not in the trade. I'm sort of sorry I'm not, that I missed this. I had some other fish I was frying. You can't be in every trade all the time. But if you're in it short, anything below this 366.17 is a little bit encouraging. I don't necessarily know that you get the full move down, but I definitely wouldn't want to be long in this at the moment unless you could take out this dump bar. If you can get back up over this 387.05, and let's set an alert, create alert, 387.05. Anything above that, I think will be a buy because it would take out a lot of negativity. These sellers here would be wrong, and I think that they'd be in a shut-off type of a pattern. So that's what I'm thinking with Netflix. Sorry, my video had got cut off, so I'm actually, this is the first time I'm actually cutting into a video. So Qualcomm is another one. This is one that had broken into the gap here. Wound up being looking good. This chart is really a mess. I got a lot of levels in here, as you can see. It wound up breaking into the gap here, getting me into the trade, and then promptly stopped me out. It now got me back in over this 71.07. It closed decently, I thought, on Friday. I would be probably an adder over this high here, over the 72.06. But if this starts breaking down below this bar again here, this 70.69, it might wind up kind of stopping me out again. I have to sort of see how I feel about this. I'll discuss it a little bit more on the stream, although I do like it as long as it's over this this gap high. So my target here, this one isn't so relevant anymore. As we know, we're over there. I'll add that back in actually after this video is over. My first sell point would be somewhere in this 74.46, which is the 61.8 fib. It's also sort of where the next volume distribution starts. And then the gap fill is 77.20, so I think 77 is probably a good spot to you know, somewhere in here, I'll probably want to, if we got up here, I'd probably be a seller anywhere somewhere in this candle, maybe back to the low here, even 76.42. So let's see if we can get kind of a bit of a gap fill on that. We did hold the bottom channel. We do have a bit of a higher low now. Now I kind of want to see if we can make a higher high, and that would be a bit of a bullish move for me in Qualcomm. Although this one is under caution with suspicion. It stopped me out. If it stops me out again, it'll go on my no-fly zone and my kind of quote-unquote you know, list of stocks that I don't really like to trade. Tesla is one that has been a bit of a mess, right? It broke the down channel here, which I had discussed being bullish, closed over the 50 MA, and I have discussed that we were in this bit of this channel and that it wouldn't surprise me if we kind of chopped sideways or came back down. So now we did come back down. So we got to hold this channel here. You know, we lost the 50, we lost the 100, we lost the 20. That's not really great, and we lost the gap. So, excuse me, for this stock to really kind of get on its feet again, we need to get back into the gap, which is 245.89. So if we can hold here and like rebound and come back up, I would think over the 245.89 gets a little bit bullish, but really you really need to take out this big reversal bar, this Friday bar, this you know, this Morgan Stanley. I'm not liking how they're playing with this stock. You know, they're upgrading, they're downgraded, they're kind of playing trader, and I think these guys are up to something that's not so kosher in my opinion. I don't really like what they're doing, but with that said, that is what is happening. So you really need to see the stock get back up over this 250, 278. So to me, that's the sort of Mason-Dixon line, so to speak, of getting of price. That if you can take back all of this this dump bar, then I'd say the stock kind of is in bull mode, and I'd maybe be looking to play that with some type of a call spread for a move back up over to the 265. If you want to play it real cautious, if we can get back up over these 265s, anywhere over them, I think that the stock will fly back up to the old all-time high, and maybe even beyond, because you would get some kind of a squeeze that I don't think most people would be expecting. So I'm always sort of a Tesla bull, even when I'm not. But I do need to see price signals, and this to me would be one of them. If we can get back up over this dump Morgan Stanley nonsense. So that's Tesla. Zillow, I had discussed. I had done a special video on it last week, and I had said that this was bullish here, and that I was looking for it to get back up to the 123 area. And you can see actually the next day, which was rather convenient, right? We did get up to 123. We got up to 123.26, which was the breakdown here, and I had said to use that to sell. The next day, we made a lower high, and we were chopping. And then the following day, there was some kind of insane price target at some kind of hedge fund manager meeting where they said that this was going to go to like in the 700s or something. The stock opened on a gap. You probably got more than you should have. I said that this was a sell the news type of an event. There was no reason for it to have been higher. This was really where it should have topped for a little bit with some backing and filling. And I had said that it would be a buyback down here. Look where we are, lo and behold. This was the gap. It was one that should have been sold. Failed at the 100 MA. I don't like that kind of price action, although we are now back down to where I had discussed. So for me, for this stock to stay healthy, it needs to stay over this this consolidation range breakout, which is the 111.35. So if you want to buy the dip somewhere in here between this 200 and the 50, that's okay, as long as it doesn't violate this 111.35. Any close below there to me gets a little bit more suspect because we're back into range and it's taking back too much of the rally. I am bullish on this stock longer term, although I do think it needs to, I guess you did get a little bit of a pullback. It needs to kind of show itself here, in the next couple of points that it's going to be healthy and, make the run back up. So I would probably be more of a put seller in here than outright stock now. Since we got this move, it'll just be a little bit easier to hold on some of the pullbacks. This is a bit of a wild trader. Anyhow, thanks for tuning in, guys. I know this video was a little bit long, and please follow me on Twitter. My handle is @JustinPulitzer, and be sure to like this video if you found it useful. Thanks.